Welcome back to DukascopyTV. Today we're talking about something every investor should know about: major stock indices. How have they performed in 2024 and which ones should you consider for your portfolio? Let's break it down. Important disclaimer: DukascopyTV is not an investment advisor. Before acting on any investment or strategy discussed, you should always do your own research and make your own independent decision. Now, back to the subject. First up, the Nikkei 225 from Japan. This index includes 225 large companies and is known for its high volatility. Why? Because Japan's economy is highly sensitive to global market trends and relies heavily on exports. Interesting fact: first published in 1950, the Nikkei 225 this year is back at levels not reached since 1989. This index includes major players like Toyota, Sony, and SoftBank, making it a critical indicator of Japan's economic health. Recently, Japan has been focusing on technological advancements and green energy, which are key drivers of Nikkei's performance. Moving on to Europe, the FTSE 100 from the UK. This index consists of the 100 largest companies listed on the London Stock Exchange. In 2023, the FTSE 100 showed moderate growth, reflecting a recovery post-Brexit. It continues this trend in 2024 with stable, positive gains. The index was created in 1984 and includes major global players like British Petroleum, HSBC, and Unilever. The FTSE 100 is heavily weighted towards financials, energy, and consumer goods sectors. FTSE stands for Financial Times Stock Exchange, representing the two companies that launched the FTSE 100, the Financial Times and the London Stock Exchange. Of course, we couldn't pass the S&P 500. This is probably the most well-known index. It includes 500 of the largest US companies covering sectors like technology, healthcare, and consumer discretionary. In 2023, the S&P 500 had a very strong performance, and as of mid-2024, it's up significantly again. Historically, it averages solid growth per year. Did you know that the S&P 500 covers about 80% of the US equity market's total value? This index is a solid choice for consistent growth. The technology sector, particularly companies like Alphabet, Apple, Microsoft, and recently Nvidia, have been major drivers of its success. While the S&P 500 is known for creating wealth, it's important to remember that downtrends and corrections happen quite often. According to Yardeni Research, there have been 36 corrections since 1950, averaging about one every 2 years. Interestingly, 22 of these corrections found their bottom within 104 days or less. Worth keeping that in mind. The CAC 40 from France is next. It features 40 of the largest French companies. This index has maintained steady growth, showing positive performance in 2024. It offers moderate volatility, making it a relatively stable investment. The CAC 40 was launched in 1987 and includes giants like L'Oréal, Total Energies, and LVMH. While most companies listed on the CAC 40 are based in France, the index is highly multinational. Approximately 45% of the listed stocks are owned by foreign investors, making it one of the most internationally diverse indices in Europe. If you're interested in investing in commodities, stocks, crypto, indices, or bonds, you should definitely try Dukascopy. You can invest with just one click, starting with just $1. Sounds good, right? Simply scan this QR code or check the link in the description below to get started. Fill out the form and then make a video call with a Dukascopy operator. That's all you need to do to open your Dukascopy bank account. Your Swiss bank account with Dukascopy will be ready to use the same day. Now, let's talk about DAX 40 from Germany. It includes 40 major German companies listed on the Frankfurt Stock Exchange. The DAX 40 performed well in 2023 and keeps growing in 2024, even though Germany's economy is struggling. This is good news for investors, but there are some worries about the overall economic outlook. Also, DAX 40 faces higher volatility due to global trade impacts. The DAX was expanded from 30 to 40 companies in 2021 to better reflect Germany's economy. Major companies include Siemens, BMW, and SAP. The automotive and industrial sectors are particularly influential in the DAX 40. The Stoxx 50 covers the Eurozone's 50 largest companies. This index has shown moderate returns, reflecting the performance of leading companies across the Eurozone. The Stoxx 50 includes major corporations like Airbus, Allianz, and Danone. It's less volatile and covers financials, industrials, and consumer discretionary sectors. The diversity across multiple countries in the Eurozone adds to its stability. Interestingly, though, the Stoxx 50 index hasn't been back to its all-time high from April 2000, while the S&P 500 index has more than tripled. So stability can be a double-edged sword. So what about the rest of Asia? Launched in 1969, the Seng Index from Hong Kong is key for exposure to Chinese markets. Established by Hang Seng Bank, which is itself one of the constituents of the index, it aimed to create the equivalent of the Dow Jones Index for Hong Kong. It's a well-established fact that markets hate uncertainty, so it's no surprise that the protests in Hong Kong in 2019, along with the US-China trade war, negatively impacted the HSI. The Hang Seng Index is volatile, but shows positive growth. It includes major financial and tech companies like Hang Seng Bank and Tencent. The index is heavily influenced by China's economic policies and developments in the tech sector. The Shanghai Composite Index tracks all stocks on the Shanghai Stock Exchange, SSE. Established in 1991, this index includes key sectors like financials, industrials, and technology. And as you can see from the chart, the SSE peaked in 2007 and now trades at about half of the peak value. Down under, the S&P ASX 200 from Australia tracks 200 large companies. It has moderate growth and volatility. This index includes major players like BHP and the Commonwealth Bank. It's a balanced option for investors driven by the performance of the commodities sector. Mining and financial services are key sectors in this index, and right now it's at an all-time high. Lastly, the BSE Sensex from India. It includes 30 of the largest companies in India and shows strong growth, driven by rapid economic expansion. It's more volatile but has high returns, especially in financials and IT sectors. Key companies include Reliance Industries and Tata Consultancy Services. The term Sensex was coined by Mr. Deepak Mahoney while he was writing about technical analysis for Business World. He merged the word sensitive and index to simplify the cumbersome original name Bombay Stock Exchange Sensitive Index. The catchy abbreviation quickly became popular and has been used ever since. So, which indices should you consider? If you're looking for high returns, check out the S&P 500 and BSE Sensex. For stability, the FTSE 100 and Stoxx 50 are good choices. For sector diversification, you can't go wrong with the S&P 500 and Stoxx 50. And for exposure to emerging markets, consider the BSE Sensex and Hang Seng Index. If you like this video, hit the subscribe button and join us at DukascopyTV, your essential hub for all things related to the biggest financial markets from around the globe since 2008. Here, we bring you diverse perspectives with our range of hosts and presenters delivering top-quality content that's straightforward, independent, and without any ads. Thank you for watching, and see you in the next one. Bye.